Hello, everyone, and welcome back to another episode. My name is Jordan. I'm a millennial investor, and today we're diving into the dividend growth portfolio, and we're going over one of the top holdings in the portfolio, tied for second place between it and WP Carey. We're going over LMT stock, or Lockheed Martin, and I made some notes, add some big bullet points I wanted to go over for this company. It's performed pretty decently well throughout the year of 2022, despite this horrible market that we're having, but overall I think it's a great investment. I think it has lots of room for growth, lots of long-term opportunity, and I'm going to go over in this video just some of the basics, some of the brief overview of why I have it as one of the top holdings in the dividend growth portfolio, and I think it's going to do great moving forward. If you want to see this portfolio for yourself, both the dividend growth and the growth portfolio, feel free to check out down below in the description so you can see the portfolio if you want to invest in it yourself, as well as other opportunities to get signed up with M1 Finance, which is also here in the description, or if you want to have mentoring calls or get signed up with anything else down below, that can be checked out down below in the description. But thank you guys for tuning in. I hope you subscribe to the channel if you found value in this video, and let's go ahead and jump straight into it. Okay, so let's go ahead and hop over to the research tab here, and let's go ahead and search LMT, Lockheed Martin stock, and let's look at the performance for the last 5 years. Up 46.5%, paying a steady dividend, increasing it year after year after year. Over the last 2 years, up 12%, not very much. Over the last year, up 22%, and then year to date, this company is up a similar 24%. Now, this company in the last month or so has started to recover like many stocks out there in the market, and I wanted to give you one of my big reasons of why I invest in this company. It's not because of geopolitical issues. If you look over the last year, when it really shot up was in February, when issues with all the war situation and potential World War III took place. This company skyrocketed in price. And the reason why I invested in this company so heavily is not because of geopolitical turmoil. The reason why I invested in this company is because it's a natural-born compounder. It is an incredible growth story stock that continues to grow both top-line and bottom-line profits. Despite this little 1.5 year here in 2017, look at the trend ever since about 2000, since this company. Since originally just barely producing a profit or little small years, ever since about the 90s, since this chart goes back, it's been a steady uptrend producing billions in free cash flow and net income. The free cash flow even looks more pretty. It just has that steady uptrend, just consistently producing positive year after positive year, record after record, with last year coming in at $7.7 billion of free cash flow, and then last year's net income being $6.3 billion. So converting pretty much all of their net income into cash as well as some on top of that. Now, if you look at their cash to debt, one of the only negatives of this company is that they do have a pretty decent debt position, $3.6 billion in cash and about $11.6 billion in debt. Now, something I will mention of this company that's absolutely incredible, if we go ahead and hop over to this company's page, I should mention real quick before I start talking about this company's products and their innovation that they have about a $110 billion backlog. If we hop over to my notes here for Amazon and we look at my backlog that I have for this company on AWS, as of the most recent quarter, they had $100 billion, almost exactly, in AWS revenue. Now, Amazon's my largest investment. This is a company that I fully believe in. It's one I stand behind. It's my largest position. And the red line right here, as of the most recent quarter, a couple weeks ago they came out with this, they had a backlog of $100 billion, and it's hard to fathom how big that really is. Well, a company like Lockheed Martin has a backlog that's even bigger than that. Between all their multi-year and sometimes decade-long military contracts, they have $110 billion, and it's diversified between all these different categories. Here's their revenue breakdown. About $2.8 billion coming from their space division, and by the way, they did just make a recent acquisition for that. They have $4 billion coming from rotary and mission systems. They have $2.7 billion coming from missiles and fire controls. They have aeronautics making up the last and biggest part of the pie at $5.8 billion, and on a percentage basis, you have 18% space, 26% rotary and mission systems, missiles and fire control making up 18%, and then that biggest slice of the pie, aeronautics, making up 38%. But the cool part is that the reason why this company continues to grow its revenue is not just because prices go up over time and military spending goes up. While that is true, the reason why this company continues to do so well is because they continually innovate. On their main page right here where it says innovation, the main 3 bullet points that they have, they give you line-by-line examples of the type of innovations that this company is doing. The first one is hypersonics. Now, I should start by saying that I'm not an expert on these topics. If you want to learn more about them, you should definitely look them up yourself. But long story short, what they say here is our hypersonic systems are strong enough to maintain shape, guidance, and communications electronics to survive exterior temperatures approaching 4,000 degrees Fahrenheit. autonomous systems. Integrating across the land, sea, air, space, cyber, and electromagnetic spectrum domains is a job for our autonomous systems. Directed energy, which is another cool way of saying lasers. With pinpoint accuracy, a laser beam can be directed at a 5 centimeter spot up to 2 kilometers away. By having a virtually unlimited magazine and minimal collateral damage, Lockheed Martin is moving this tech from the lab to the field. These are just the type of things that Lockheed Martin is working on, and this is just what they tell us about. Imagine how much other cool things that Lockheed Martin's working on that they probably can't legally disclose because they have the largest consumer of them being the United States government. Now, I want to talk real quick is that the reason why this company originally, going back a couple months ago, why it was originally dipping along with the rest of the market, why it went from about $450 a share down to just a couple months ago hitting as low as $380, is because this company's EPS is projected to go down. Last year, they produced $22.76. This year, they're only expected to do $21.70. It's went down. And if we go back to Qualtern, when we look on a quarter-over-quarter basis, you can see this. Okay, the EPS lately has been about $6, $6.50. Last quarter, they only put up $1.16 to be exact. If you look at their free cash flow, the free cash flow was originally sometimes around anywhere from about $1.5 to as high as $3 million. Last quarter, they only put up $1 billion, and then their net income followed suit as well, normally putting up $2 billion or so, and last quarter, they didn't even put up $1 billion. They put up $0.3 billion. So this has been a big downturn. Now, it's easy to look at this chart and say, okay, is this company done growing? But no, that's not the case at all. Because next year, they're expected to have a big ramp up, back up to about $28 from this year's disappointing $21. That's a pretty substantial move upwards. And this is where I did some digging, and I found out the reason why this company's EPS is expected to go down. They were expected to do about $26.70, which would be a big move up from last year's 22 and change. But the reason why is they have this one-time hit to their EPS. They're having a potential settlement from their pension. They're having a lawsuit, which is going to be no big deal. If they have it happen, it's going to be a one-time thing, and it's going to take them down to about $25. Now, next year, because of that thing just being a one-time case scenario, they're going to come back big time at about $28 per share. Now, furthermore, this company is a dividend payer. It's a great dividend payer, to be exact. As of today's price of about $4.40, this company has a dividend yield of 2.5%, about 2.55 to be exact. And if history tells us anything, if we look at the streak, typically they announce a dividend raise September of every year, just like they did here in 2017, just like they did here in 2018, like they did in 2019, 2020, 2021, and now hopefully in the next month or so, hopefully they'll be doing that in September of 2022. So overall, this is a company that trades at a decent valuation. I think has a competitive moat since they have almost all their contracts coming from the United States government, and they produce almost all the products and aircraft for the United States Air Force as well as other categories as well. But more importantly, this is a company that's growing. It's a company that's innovating. It's a company that's very profitable and I think has a long-term growth story. If you go ahead and look over time, like I talked about that debt earlier, for the last several years, that debt's been trending down since about 2016. And then if you look at the cash, it's been staying flat, if not even being a bit of an uptrend since about 2016 as of late. This company is going to continue to return lots of cash to shareholders, in my opinion, and regardless of what president's in office or what political party is influencing this, at the end of the day, we need a military, and we're going to need to fund it. And the budget, in my opinion, as inflation goes up and spending continues to increase, it likely means that we're probably going to have to give more money to Lockheed Martin. So if that's the case, if that's true, if we continue to do so, then this company's likely going to see a big uproar in its investments back into itself and likely return lots and lots and lots of cash to shareholders. So if that's correct, that's going to be a good opportunity for an investor such as myself, and that's the reason why, going back to the portfolio, why I have it at 9% of the dividend growth portfolio and expect it to stay at a pretty high percentage unless this company really rockets up in price. But thank you guys so much for watching. That was a brief overview of Lockheed Martin and why I own it and some of my bullish sentiment moving forward. If you want to check out the stuff down below, as well as the portfolio you just saw, mentoring calls, Yada savings accounts, credit card referrals, all that good stuff, it is down below in the description. But other than that, guys, thank you so much for watching, and I'll catch you guys next time.